Every economic entity must present its fund flow statement to all its stakeholders. Fund flow statement. A fund flow statement is a statement prepared to analyze the reasons for changes in financial position of a company between two balance sheets. It portrays the inflow and outflow of funds, that is, sources of funds and applications of funds for a particular period. It also rights to say that a fund flow statement is prepared to explain the changes in the working capital position of a company. Objectives of fund flow statement. A question arises as to why prepare fund flow statement when we already prepare profit and loss and balance sheet. The need here arises because the profit and loss and balance sheet will not explain the reasons for a change in the financial position. Profit and loss accounts and balance sheet will give 2 years' figures, that is, current years and previous years, but it will not explain as to why the movement has happened. Let's say, the extent of use of long-term funds for our long-term needs and the use of short-term funds for short-term needs. Here is why fund flow statement is prepared. Components of a fund flow statement. A fund flow statement comprises of 1. Sources of funds. It talks about the extent of funds availed from owners, outsiders. 2. Application of funds. It talks about how the funds have been utilized. Funds deployed in fixed assets, funds deployed in current assets. Benefits of preparing a fund flow statement. It helps to explain the managers of funds as to why the company is sitting in liquidity strain despite making profits as reflected in profit and loss statement. On the contrary, it helps the managers to understand as to how a company is financially strong despite losses made by it in its operation front. So, as you can see, every economic entity must present its financial information to all its stakeholders. The information provided in the financials must be accurate and present a true picture of the entity. In the next lecture, we will study the various terminologies of accounting. Thank you.